Welcome to Bell2Bell Podcast, powered by IBN. This original audio production delivers market and sector insights, as well as exclusive interviews with innovative executives shaping the future in fast-moving industries, and may feature a client partner of IBN or one of the 60-plus investor-focused brands within IBN's dynamic brand portfolio. As a multifaceted financial news and publishing company, IBN leverages its extensive distribution network, utilizing multiple proprietary corporate communication tools to introduce both public and private companies to a vast and diverse audience of investors, consumers, influencers, journalists, and other targeted segments of the public. IBN may have received compensation to produce this audio content. Please be sure to read IBN's entire disclaimers for full disclosures. Now sit back, relax, and enjoy the next revelatory episode of IBN's Bell2Bell Podcast.
Welcome back, everybody, to another Investor Brand Network Bell2Bell Podcast, where we ring the bell for your financial success. We are speaking to, or at least I'm speaking to for the very first time, Strawberry Fields REIT Incorporated, REIT standing for Real Estate Investment Trust. You can find the company on the New York Stock Exchange under the ticker symbol STRW. I'd like you to visit us here at the Investor Brand Network. Click on the Clients tab, and in alphabetical order, you will find the company. And at the top of that page, you will find investment considerations that really hone in on exactly what type of company this is, the markets that they operate in. But since we're lucky enough to be joined by the founder, chairman, and CEO of the company, that's Moishe Gubin, we get to hear it from him exactly about those markets and the business model for the company. So Moishe, thank you for taking time to speak with me today.
Thank you for having me.
Absolutely. So the business model is sort of in the name of the company with that real estate investment trust. And I did have a chance to go to your beautiful website, which is just Strawberry Fields REIT, REIT.com. And that really drives home, as the population of America ages, the need for qualified elder care facilities becomes more acute. And in doing my own research, I'm seeing that the baby boomers, followed by me, Generation X, you have an ever-growing target market, if you will, as we age into the need for these care facilities. You've already got a footprint across 10 states, which is fabulous. Tell us a little bit about what your company is, what you do, and the markets that you operate in.
Well, you just basically touched on probably the largest tailwind we have going for us in our business. We're a healthcare REIT, triple net leases, 10-year leases with 2 5-year renewals, nice and clean. We're dispersed pretty evenly over 10 states, where no specific state or tenant of ours is larger than. I mean, our biggest one anomaly is 25%, but everyone else is 18 to 10%. So it fits into a really nice pie graph on how we divvy it up throughout the country and with our tenant base. Our most of our assets are nursing homes. We're 93% nursing homes, skilled nursing facilities, and the rest of our assets are a couple of hospitals and assisted livings. We feel this is really the only business that I've been employed in. I started as an accounts payable payroll bookkeeper in 1997, 1998. And worked my way through an organization, graduating out of that organization as a controller, running a home and having an adult daycare center that I was involved in. Moved to the Midwest, took a job as director of budgeting for 17 facilities, and bought our first asset 22 years ago with my partner, Michael Blisco, and who's still on our board. And we've continued to grow.
Well, if you visit strawberryfieldsreit.com, you can find out about the portfolio. You can look at a location map. You can also find the Q2 2025 earnings call available to you right there on the homepage, which makes it really convenient. Moishe, you just gave us a little bit about your background as the founder, chairman, and CEO. You've been immersed in this industry since your 20s, and obviously, because of the fact that you're an accountant like myself, you're smarter than everybody else in the room. I'm just kidding. That being said, tell me a little bit more about what brought you here then. So in other words, and the team around you, you mentioned your partner who's still on the board, your former partner is still on the board. Let's talk a little bit about who is Strawberry Fields REIT from a corporate standpoint and the employee base.
Okay, so for the brain trust that makes up who we are, which is a different question than I thought you were asking. That group of people today, our board of directors, are real financial people that are doing, one of them's a CEO of a steel company in Illinois. One of them runs a pharmacy they're not in Illinois. They're in Indiana. I got one who runs a pharmacy in Illinois. We have one director that was one of the original partners at Marcus Millichap, who knows real estate real well. Then you got myself, and you got Michael, and we got one who's an accountant who has an accounting firm. He's on a bunch of different publicly traded boards. So we meet all of the wisdom, if that's the right way to say, on our board membership, to be people that know the nursing home world, know the real estate market, know healthcare, know public markets, know marketing. And that's how well-rounded we are on the board side. But I was going to say, when we started this thing, really, we started it with an operator point of view. So Michael and I both are nursing home people that worked in nursing homes from our beginning of our careers. Michael started as a CNA. Like I told you, I started as an accounts payable payroll bookkeeper. And so we run a company that's basically as if we were going to be operating this, how would we, what deal would we make? Where would we buy? How would we buy? What kind of services would we provide? And then we find a tenant that has a similar point of view. And, we like to, because we're in the business, we're able to really figure out their pedigree, how they learn their business, how they know what they know. And so it puts us up against all of our competitors, having an advantage where if something goes bad, we could stabilize it and fix a problem before it became a big loss. Most of the time in real estate, you're going to have tenant turnover at some point. In our business, 7 years, 8 years running, we haven't missed a rent payment. We've got collected 100% of our rents. And similar to my bank, where we haven't written off a bad loan, this is kind of the same thing. The business is ran with me being the CEO. I have underneath me a chief investment officer, chief operating officer, who also a CPA. His background was working for North Cape, and he knows real estate. We have an attorney, an in-house counsel. And we have mainly the rest of the team is asset managers and accounting folks, CFO, IU graduate, and with public experience, and then we got a couple of accounting people underneath them. But really, the nuts and bolts of this business is top down, I would say.
Mm-hmm.
But and then what we always tell people is we manage the asset and we manage the balance sheet. That's really to simplify the business. It's that simple. 2 items, which is complicated, but it's 2 items to be able to safeguard that the assets are being taken care of by our tenants. The rents are being collected. The data is being spread and supported, and and we're analyzing. We're reporting everything. We're timely with all of our filings. Year in, year out, month in, quarter out. We go into all these events, meeting investors and talking to people all the time. And that's really the business. At the end of the day, when you go down to nitty gritty, it's our tenants taking care of the residents, which is really our mindset has previously been operators. What we want, we want to be proud of our product, and our product is our tenants, giving good care to the residents.
That's a great point. I'm glad you finished with that point, because I'm sure not just to your investors, that's music to the ears of your end customers as well, and their families that put them in these facilities. So you mentioned really it's been a great year for your company. I'm looking at the press wire for your company. I'm looking at outperforming, beats estimates, these kind of words. So kudos to you on a great 2025. But sometimes when you're looking at it through the lens of an accountant, a CPA, and the CEO, which you are all one and the same, looking at it through that lens, you might have very different milestones for your company. So looking back on the year so far, what do you see as some of the major achievements you've been able to pull off as a company?
Well, I mean, we're weathering a business, there's ups and downs. It's cyclical. There was a downturn probably 3-4 years ago, and now it's already back to an upturn. from my point of view, we're only half the year done as far as reporting goes. We want to beat every year a singular deal size and a global aggregated deal size. So I mean, our test has been we want to do 150 million a year, and or more. We haven't had a deal that we haven't been able to do. We want to do it. So as soon as a seller agrees with us, on a purchase price, we close it. We close deals. So yeah, I mean, our positive so far is, it's strong, but it's status quo. I mean, we're collecting all of our rents, paying our bills. We raised our dividend already once, which was sizable, which was good. Yeah, I don't see negatives. I can't extol positives yet either because we're only halfway through and I want to beat the numbers that we had previous years. But we remain true to our disciplined approach and how we buy. So we haven't gone crazy and start just buying things random so that we could just say we're growing. We're still strict. You look at our investor deck that we produced, the last 10 years, it has in there the disciplined investing approach, exactly how we did it before, how we do it now. When somebody asks us about affiliated transactions, we point to the fact that everything we do is in the same matrix that we use for how we buy, whether it's related party, not related party, doesn't make a difference. We're buying exactly the same way. The math always works. And I mean, we have a good company. I would say that we're looking to finish the year strong. And as far as, if anything, I could have a negative, which is we're fighting and pushing every day to kind of grow up to be a more mature entity. And that to the investor public might not matter, but to the professional investors, the institutions that are out there that look at us, when they compare me to a peer, I'm still lacking in certain areas that I'm pushing myself to get done. Like one example would be an unsecured line of credit. Now, mind you, we don't have a problem getting cash. We could close any deal. But to an institutional investor, potentially look at it and say, well, they don't have a line of credit. If they don't have a line of credit, how are they going to grow? And so that's something we have to overcome. I have to get that done just for the optics of those investors, that are out there. I think the mom and pop or the singular, not institutional investor, but the retail investor, I think our stock is perfect for them, from this point of view of it's a more conservative investment with a better yield. We're only paying out a ratio of less than 50% on our payout ratio. Our share growth outside of the payout is about 11% growth rate on the share growth. So meaning when we only distribute 45% or 50%, the other 50% is used to buy more assets, and therefore we are growing the value of each share, whether the stock price shows it or not. We're growing the value per share at an 11% clip annually.
Well, one thing you're remaining true to as an accountant as well is that air of conservatism. So I do appreciate your candor and looking at yourself and evaluating yourself through the eyes of an institutional banker. Just to clarify for some of the other investors, the view upon your company is incredibly bullish as well from people like Zacks, who upgraded you back on July 4th. To a strong buy. So happy Independence Day gift for you there. So you went from a buy to a strong buy based on your fundamentals and your EPS estimates. So, the outside is taking note of what you're doing. Moishe, as you look forward to the end of 2025, and these months can be a little bit more choppy for some industries, maybe not your industry, and I'd like to learn that. But, when we get into the holidays, the October, November, December months, as you wrap up 2025, do you have any operational goals right now?
No. Our business, again, is status quo. We, keep in mind, out of 142 licenses or 143, we're getting rent checks. We get one rent check per building. We don't have any operational relationship with the tenants. So the tenants do whatever they do. They have the right of quiet enjoyment. We don't get in the way with it. We monitor what they do as asset managers, but at the same token, we don't tell them what to do. We're not involved with any care. We don't know any of the patients. We don't have any access to any of the data. That being said, our company, I've had longevity Um, I've had longevity. I just lost my lawyer, who was our lawyer for 14 years and also a good friend. And he left us after many, 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 many years. And so we replaced him with a different friend who's also a lawyer. But outside of him, he was our longest tenured employee at 15 years, basically. And so now we have the longest tenure is one of our asset managers who's been there 11 years. And so we don't have any turnover. I mean, we add staff when we need to add. And really what we've been adding is asset managers as time goes on. From accounting, you're a CPA, so as an accounting person, more bigger numbers and larger numbers, they don't make it more work, right? It's the same, it's the same GL code, same GL codes and consolidating a financial statement. Maybe it's a little harder when you have more assets because there's more railroad ties. But overall, from the accounting point of view, we have 3 CPAs in an accounting department, and then you have me as an accountant. So we have 5 accountants out of 9 employees, by the way. and and one thing I tell you about my staff and our company, every single employee that works in my company has been trained by me. We took people with experience, but the hands-on training came from me, which could be a knock in some regards because I shouldn't be that detailed, but I am. And our company runs very, very well. We have a weekly meeting where we're all together and we just schmooze. People say that I have a sense of humor and I roast people, but it's fine. We have a good company, and we have a good family. The employees are part of the family. They've all been invited to I married off some kids. Like they're all part of our family, and we run real well. And it's a good business.
Yeah, it sounds like it. And it sounds like a close-knit group. And as well, kudos to you for building a team like that around yourself, but also putting your handprint and fingerprints all over it. Honestly, if you're founder, chairman, and CEO, I really don't see any other choice in the matter. Just to bring up some recent news, viewers, if you want to hit that press wire again, using that ticker symbol STRW, Strawberry Fields REIT announces an acquisition of 5.3 million skilled nursing assisted living facility in Missouri. So right along with what Moishe has been telling us, right inside that wheelhouse. They're not trying to build a better mousetrap. They don't need to right now. The process is growing. And as you just pointed out, Moishe, you guys have the internal foundation with understanding and being immersed in this industry for decades at this point now. You understand how to grow. So I like the word you used earlier. When it comes to the institutional investors, you just need to tweak the optics a little bit, getting that unsecured line of credit, but you're issuing dividends, you're outperforming. Analysts like Zach's are paying attention to you and giving you strong buy recommendations. What a wonderful time to be talking to Strawberry Fields REIT. I need you to go to that website, REIT. That's how you spell REIT, Real Estate Investment Trust. Strawberry Fields REIT. There's a lot there. And of course, at the Investor Brand Network, we have a full write-up on the company, and there'll be much more coming out as more coverage expands at Investor Brand Network and the Bell2Bell Podcast today with Moishe. Moishe, any closing thoughts or comments you'd like to share with us before we let you go today?
Well, no, I appreciate you having me. I would just say, just to close the loop on the last thing that you said about that deal. I think one thing to push for anybody out there looking to invest is that one of the ways that we mitigate the risk in our portfolio is we use something called a master lease structure. And so like in that example of that $5.3 million deal in Poplar Bluff, Missouri, okay, which is the southern western corner of Missouri. We didn't just buy one asset in the middle of nowhere. We bought an asset that goes into a master lease with a different tenant that has already 9 properties. This becomes number 10. And what that does in a master lease structure is that it causes the tenant in an all or none deal. So they can't say, I don't like this one building, so I'm not going to pay rent there, and I'll pay rent in all the other 9. They have to pay for all 10 or they lose the properties. And so I guess what I would push, even though it's an awkward last thing to finish on, but it's a point to be made just to close the loop on what you said, which is we mitigate everything we're doing here is somewhat mitigating risk. Besides for running a business and doing what we do, for letting the public know what we're doing so that the stock is a healthy stock to invest in, right? Everything else is mitigating risk. We're running a business in a way that we want to get the best results with the least amount of risk they're putting out there. And so, because that's the business, we're in a healthcare REIT, which is, if it was some other kind of business, you'd be way more risky, and you wouldn't be mitigating risk as much as you would do here. Over here, we're mitigating risk, and the one way we're doing that is through the master lease structure. Outside of that, I appreciate your time. I could talk shop all day long, literally. This was a pretty short interview, but I love what I do. I love our company. Again, it's my baby, and that's that.
Well, that's great. That's a great closing, and I do appreciate that. And I appreciate you closing the loop for us as well, Moishe. And I also want to say, hey, if you want to talk shop again, we will have you back here on the B2B podcast very, very soon. That's Moishe Gubin, Chairman, Founder, CEO of Strawberry Fields REIT Incorporated, traded on the NYSE under the ticker symbol STRW. Moishe, thanks again for your time today.
You're welcome.
All right, from Moishe Gubin, this is Stuart Smith saying thanks so much for tuning in to the B2B podcast. That's Bell2Bell Podcast, brought to you by the Investor Brand Network.
The Bell2Bell Podcast is an original content production powered by IBN, a multifaceted financial news and publishing company that delivers next-generation corporate communication solutions. Utilizing proprietary corporate communication tools such as news aggregation and syndication, social communication, and brand awareness techniques, among others, IBN introduces both public and private companies to diverse audiences to enhance reach and recognition. IBN may receive compensation for services and solutions provided to its client partners. You should assume that the owners, officers, and directors of IBN or financial analysts mentioned in this production may hold a position in and may intend to trade the securities in their own accounts. This production is not an offer or recommendation to buy or sell any securities that may be mentioned in this production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries inherent investment risk. Listeners should review the companies thoroughly with a registered investment advisor or registered stockbroker. This production by IBN is not purported to be a complete study of the featured company or other companies mentioned. Information used in statements of fact have been obtained from featured companies and other sources but not verified nor guaranteed by IBN as to completeness and accuracy. Such information is subject to change without notice. Please see IBN's full disclaimers and disclosures at www.ibn.fm/disclaimer. Music in this episode is by Infraction. For more, visit inaudio.org.